Hello, everyone. This is Sasha with the LTRC. Thank you for joining us for the 2020 year-end accounting checklist for law firms with our sponsor, CosmoLex Legal, as part of the LTRC Industry Insight Series held every Wednesday. Our speaker today is Erica Bursler. Erica is the Vice President of CosmoLex Developers of the only fully integrated case management, billing, and complete accounting system specifically designed for law offices. Erica's degree is in business administration, and she has nearly a decade of experience in the legal software industry, catering to the specialized technology needs of small to mid-sized law firms. Erica is passionate about helping legal professionals improve the way their law firms run, and she has given numerous presentations across North America on legal technologies such as law practice technology management, cloud computing, and legal billing and trust accounting compliance to help spread her knowledge. Thank you all for joining us. We'll now begin the webinar.
Great, thank you so much, Sasha, and thank you everyone for attending our session today. I do want to jump right into it because there is a lot to cover. So as mentioned, this is a year-end accounting checklist topic. I think as the year is ending, definitely accounting and bookkeeping and kind of closing up the year, that's something that it has everyone's attention. And now's a great time to talk about the tasks that will have to be completed. This is something that has to be done each and every year. You might be part of either first law firm, or you might have separated off. I know a lot of attorneys that have separated off from larger firms and now need to take this responsibility on themselves. It's good to be aware of what needs to be done at the end of each year. So we'll start by just doing an overview of legal accounting. You know, I'm pretty sure that most of you are not accountants yourself, so we will just give that as a foundation and then dive into that year-end accounting checklist. There are many different tasks that need to be completed at the end of the year. I will be highlighting the most essential or top-level items today, but as Sasha mentioned, we will provide you a fully detailed checklist, which is in the chat right now, but also will be sent after the webinar for you to actually use as a reference. So do understand that not every single checkpoint will be covered in the webinar, but you will have that to take home with you. And another note is, while this is an end-of-year checklist, many of these steps focus on reviewing the year's activities. So right now is really a great time to check in and catch up at least to Q4, if you have not already, so that at the end of the year, it's not overwhelming. I think that's what happens so often is we put it off thinking, oh, I'll worry about that in January, or I'll worry about that in December, and then it becomes too much. So if you have the bandwidth to do it now, I definitely recommend to do a check-in right at the start of Q4. And lastly, we'll talk about technology. So more so improvements or tips, some of which that can be focused on improved processes. Others are related to the actual tools that you use to complete these various tasks and how to use them in the best way. And my goal really is to present this topic, which accounting can be pretty dry, can be pretty boring. I'm trying to kind of present it in as simply as possible. To give you some action items to either take yourself, if you're doing the accounting yourself, or to open that conversation with your bookkeeper and accountant and be actually to have a conversation in the same language so that you understand what is and is not being done. All right, so diving into our first portion is legal accounting. What is it? I always like to start with this as a baseline because I think for those that are not familiar with accounting or maybe never dealt with it themselves, it's kind of this, arbitrary word. You don't really know what it consists of. And in my mind, there are three parts to legal accounting, meaning accounting for law firms. The first being the business accounting. So that's really what any business needs to deal with. End of year, you're worrying about your tax filing, your expenses as a business, your income, and just reconciling of your bank accounts. Every business needs to do that activity, and every accountant or bookkeeper is very familiar with that type of activity. The first thing that's very unique to law firms is dealing with the specific matter. There's a lot of different activities that are not just firm level, but have to be recorded very specifically on the matter and handled in a certain way. That can include your matter costs, what you pay out of pocket that needs to be reimbursed, your trust ledgers, and also how you're allocating your invoice payments, because you are a service business and you do have those invoice payments coming in per client. And then lastly is compliance. And compliance is something that actually impacts all of the items on the screen. You need to make sure that you're aware of what your requirements are, not just overall for the legal community, but for your particular type of practice area, for your state. And that comes down to very often trust accounting is a big part of that, which we'll talk about today, and any legal specific requirements as to how you should handle any financial activities within your firm. So you want to be sure that, as you can see, there's a lot of unique requirements specific to law firms. You want to make sure that whoever manages your accounting, that they have the knowledge and preferably experience to complete these tasks correctly, and not just think of, oh, accounting is a generic term. It's not so generic when it comes to law firms. All right, so I'm quite curious actually how you manage your law firm routine accounting right now. So those different activities that I was talking about, we just launched a poll. So the options are maybe you do it yourself. Do you have an internal staff that's not a licensed bookkeeper, let's say? Do you have a bookkeeper on staff, or are you using an external bookkeeper or accountant? And we'll leave that up for just a few more seconds. Okay, let's take a look at those results. So about 48%, practically half of you on the call today, do the bookkeeping yourself. The next is an internal bookkeeper or external bookkeeper. So that's actually very helpful and not surprising, to be honest. I think a lot of times in law firms, I'm sure you can all relate to wearing many hats or trying to take on as much as you can, usually purely due to the fact that you don't want to have to invest in hiring staff. And I'll tell you right now, that's not a good reason to do it yourself. I think that there's a lot of specialization per people, like expertise. And I guarantee those of you that do it yourself, your expertise is not accounting. Your expertise is being a lawyer and servicing your clients. So we'll talk a little bit more about these activities, and maybe you're not aware of half the stuff that needs to be done, which will be great. So thank you everyone for participating in that. I myself, I believe in utilizing resources most effectively, and just depending on how your firm is set up, sometimes it makes sense to have an outside party do these activities for you. And hopefully this checklist can help you determine how that should be handled. Should I continue to do things the way I'm doing it? Should I do it a little bit different? And if I have someone else do these activities, how do I work with them to ensure that things are being done properly? Because a big part of it also is that control, that feeling of security if you're doing it yourself. But if that relationship is managed properly, you'll feel just as secure if somebody else is taking that work off of your plate. All right, so let's dive into the checklist. And I do want to give a reminder that there is a handout for this. So you don't have to frantically copy down notes. It is some very valuable information, but we will, it's already in the chat, but we'll provide that afterwards as well. Okay, so checklist starts with ensuring you've captured all of your accounts receivable, meaning, what is owed and what payments have come in, and your accounts payable of the current year. When it comes to your billing, you want to make sure that you're invoicing your clients as many as possible through to December 31st. Does that mean you need to wait to December 31st to run those bills? Absolutely not. But at that point, you want to be able to bill as much as possible. You want to try to not carry those balances over to the following year. So make sure your time entries are all captured. Make sure all of your expenses are captured and associated to the appropriate matters if that is necessary, if it's a reimbursable cost. Invoice your clients, like I said, and include any items that may have been missed. So even if you do routine billing, it's always good to see, is there some items that I've missed? Or even if I only have 2 weeks worth of billing, is it worth getting a bill out right now? Those decisions have to be made. And make sure if you have any funds available, you want to apply them. So we'll talk about that a little bit with trust accounting as well, but if there's any retainers available, any payments received, you have checks sitting in a drawer that haven't been applied or deposited, make sure you go ahead and clean that up. This should ideally be a routine process, meaning usually monthly. You want to do that checks and balances regularly, but end of year is a good time to say, okay, I need to check this now. Like at the latest, once a year, you should check this activity. Then you want to pay any remaining AP bills. Those are the bills that you yourself owe: rent, utilities, FedEx, etc. So you want to make sure your bills that have been paid up until December have been entered in your system, as well as those transactions. And review the due dates of your current bills. See what makes sense to pay now, what makes sense to pay the following month, because that factors into your tax reporting. So you want to plan those out appropriately. The next item is reconciling. So you absolutely need to reconcile through the end of the year. Reconciling is a monthly activity at the least, I should say. Some people do it even more frequently than that, but it has to at least be monthly. You want to reconcile your operating accounts, which is your business account, your trust accounts, and if you're managing credit cards in your business. Reconcile all three, and we'll talk about why that is. This is actually sometimes the most neglected accounting task, yet it's one of the most important to complete. And this is one of the tasks, especially at the minimum, if you have somebody doing your reconciliations, require that they provide some sort of proof of it every month. Because the further you get delayed on reconciliations, the harder it is to find those mistakes, fix them, and ensure your books are accurate. So stay on top of that the best that you can. Like I said, this does not have to wait till the end of the month. Right now, you should be verifying if your reconciliations have been done through November 1st, and that will help to make sure that the end of year is not too overwhelming for you. Few things to keep in mind when reconciling. And for those just to get really basic, you're basically just comparing your accounting books with what happened in the bank and ensuring that they match each and every month. That's the general idea. So the first thing is you want to ensure that any fees or interest are being entered. If there's any fees that the bank is charging, maybe a wire fee, a bounce check fee, are they being entered? Are they being accounted for? Because those are still transactions within your bank account. If it's for your trust account, you need to determine how those fees should be handled. Ideally, fees like bank type fees should not come out of the trust account, ideally. So work with your institution, your bank institution, to see if you can have those fees come out of a connected business account instead, because you don't want those to impact your client ledger. If you choose to pass those fees through, that's a different discussion, but it ultimately is a firm cost and should come out of the business account. Also, if you have your credit cards, make sure if there's any finance charges that took place, interest, late fees, any type of rewards or credits that were applied to those credit cards throughout the month. And if there's any items that need to be, again, allocated to their particular matters, possibly for reimbursement, make sure that has been confirmed. You'll see that a trend through this checklist is that matter accounting aspect, not just the transactions and making sure they're in, but that they're associated to the proper matters. Then you get to clearing your transactions. That's the whole purpose of reconciling. So you want to make sure that they're being reviewed carefully, making sure that clear the ones that actually correspond with your bank statement, have some sort of process to identify those that are uncleared for long periods of time, which is that aged transactions point. Anything that is uncleared for 6 months or older, and again, depending on whether it's a trust account or the business account, rules may differ, but they're called basically stale checks or outdated checks. Why? Why are they still pending? What took place? Are there uncleared deposits? Why have them not been cleared? Again, how they get handled in the trust account has a lot more rules associated to it. You want to find out what to do with unclaimed funds, meaning if you cut a check out to somebody and they never claimed it, well, what are you going to do with that? And figure out what to do with these uncleared items. Do you want to stop payment? Do you want to talk to the client, say what happened to the check? If it's a vendor, find out what happened. Maybe they're holding on to that check for some reason, but you want to at least be aware of it and start those conversations. Confirm matter links, as I mentioned, which is, both for client costs and also trust transactions. Make sure that they're associated to their appropriate matters, and make adjustments. So to me, adjustments fall into two categories. One is if there's a bank error, meaning let's say you're supposed to deposit a $1,000 check and they made it 1,001 by mistake. Or they could have duplicated an entry. Things happen all the time. So you need to be mindful of, well, was this error reversed in the same month, or was it reversed in a different month, and how should that be handled? Either way, it needs to be accounted for, but it depends on the tool that you have, the accounting tool that you're using, as to how those need to be entered. Some tools allow you to, like, it kind of does it in an automated fashion while you're reconciling. Some a journal entry. So if you need a little bit of guidance on that, do speak with your accountant as to how to make those adjustments. In general, adjustments should not be used for your unbalanced books. So if your reconciliation is off by $30, that does not mean you just do a $30 adjustment and call it a day. You need to make sure that you're actually fixing the issue at hand. Maybe it's a transposition error, maybe there's a duplicate data entry happening, maybe there's a transaction that's missing. That digging needs to be done. You need to figure out why in actuality it is off. Especially true for the trust account. You cannot do just random adjustments to balance your trust account. That's a big compliance issue. So you need to get to the root of that problem and why that's taking place and fix it appropriately and have an audit trail to show that. For the business account, there's a little bit more flexibility in terms of how or when you're able to do adjustments. So do work with your accountant to decide, if it's 10 cents, if it's $2, like what makes sense to do an adjustment. Okay, we did talk about reconciling. A lot of that goes into the trust account, but there's a few other items with the trust account as well. First is you want to confirm your client retainer balances. So you should never have a closed matter that has money in trust. It should never be the case. If your system or tool has an archival function, like able to close or inactivate matters, it's important to review those to make sure they don't have any funds assigned to them. They should have all been dispersed, either returned to the client or dispersed out to third parties. Some tools prevent archival of matters if they have funds available, but not all. So I suggest looking at those inactive files and just making sure there's no balances there. Is the work complete on these matters? Did you bill for all your time? Did you get paid from the retainer? Very often firms forget to move the money from trust to the business account. So you want to ensure that whatever should have been earned is actually earned from an accounting perspective. Figure out whether or not a file should be closed. When was the last time you've done trust activity for them or billing for them? Is this a dormant matter? If you're not expecting to do work, should you possibly close the file? And if you're going to close the file, are there funds remaining? And what should be done with those funds? Depending on your retainer agreement, they may need to be returned to the client. So you want to make sure to do that and zero out those funds before you go ahead and archive a particular matter. And as always, just check with your local bar in terms of state regulations and what should be done if funds need to be returned or if you have that unclaimed check, like I mentioned. Maybe you did a check to return the funds to the client, but they never cashed it. Well, what happens? Every state has different process for that. Checking your trust activities, very much in line with that first point. You need to ensure if there are any outstanding transactions, what happened with them, how aged are they, has your settlement funds cleared in case you're waiting for a large deposit to come in, have all of your fees been taken out, if you're supposed to be covering certain costs with those trust funds, has that been done in full? And like I said, if inactive, refund any of those remaining funds that might be there. Then we get into reconciling. So reconciliation, of course, has to be done just like with your business account, just like with your credit card accounts, comparing your records, ensuring there's no mistakes. But you also want to make sure that you're reconciling each and every month. So if you're going back right now, let's say, hope it's not the case, but let's say you're going back to January to reconcile, you want to make sure that you have a statement for each and every month and also a three-way reconciliation report. That is comparing your book balance, your bank balance, and all of the ledgers that each client has. So you want to ensure that you're able to produce that report because that is usually required for an audit. And then you want to print and archive your reports for trust. It's obviously essential to make sure that you have those reports available in case an audit were to occur. I do recommend, as I said before, requesting your specific audit reports from your accounting staff each and every month to make sure they're staying up to date on that. Then you have your year-end reporting. Very often your accountant, when it comes tax time, they will ask for your profit and loss and your balance sheet. And there's a few things to keep in mind. You want to look at your balance sheet, which is a collection of your assets, liabilities, and equity. Make sure there's no irregularities in those balances. Make sure if any new activities took place, like maybe you have some new debts that came about, maybe you have a loan that you took out, maybe you have additional costs that took place with the client that you need to account for, accrued depreciation, any draws from equity or any owner's draw that took place. Those are all balance sheet activities. So just ensure that those are captured. Maybe you purchased a new building or you purchased some large pieces of furniture. Make sure those are all accounted for. Profit and loss is your income and your expense. So you want to make sure that all of your income is allocated appropriately. However you have that divided up on your general ledger, that you have all of your entries there, your reimbursable client costs, any costs that need to be reimbursed to you, and your general firm expenses. Whatever you're paying out as a payable should be marked as a particular expense and show up on your profit and loss. So again, you want to do that check to make sure those are all crossed off and accounted for. You can often, especially with the profit and loss, or even with the balance sheet, but usually with your P&L, also known as an income statement, by the way, you can often compare to either budgets or prior year to see what those overall trends are. And then the last item here is accounts receivable. This really brings us back to that first point of getting your billing done. How much accounts receivable is there? What's being done to collect on that? How old are those unpaid balances? And should you write off anything? Honestly, write-off should be the last ditch effort. You should do activities before that to collect, but where are you in that process and what has been done so far? You need to file your 1099 forms. So this is for any vendors typically that you work with that you've paid out more than $600 in the year. You want to know who those people are. Make sure you have any vendor information, meaning maybe their EIN, the social security number, obviously the proper contact and the company name. Are they eligible for 1099? Some companies are not, so you want to make sure you have that information, and then prepare that 1099 form to e-file by the deadline. Deadline is, I think, January, end of January, so you want to make sure that any missing information is accounted for as soon as possible, so that when that time comes in January, you're not fumbling around. That tends to happen quite a lot. And then 1096, which is a compilation form, that just goes along with your 1099. So the 1099 is for each person, and then you need to prepare a 1096. Some remaining accounting activities, these happen, again, end of year, usually in January once everything else has been completed. So this is the last items that are done, usually by your accountant. So if you have somebody who closes your book at the end of the year, these are the type of items we're talking about. You would first, or they would first run the trial balance. Trial balance is basically all of your general ledger accounts and what their balances are as of 12/31. They can look at those accounts, make any adjustments if needed. Some accountants may want to shift funds between accounts, or if they notice something is misposted or posted incorrectly by either the bookkeeper or somebody else on your staff, that's the time they go in and make those fixes. You want to move net income. Now, this is your profit and loss starts new and fresh every single year. So this is a way of kind of getting that refresh for 2021 in this case. If your software doesn't automatically do that, you need to ensure that you're going in there and moving that net income, or it might be called income and expense summary, to the balance sheet. And that's usually a journal entry, and it's usually dated January 1. So you want to make sure, well, know your tool first off, whatever your accountant uses, and if it does that transition for you. If not, that step needs to be completed. And then close the books as of 12/31. So you don't close your books on January 1. Usually there's a bit of time where the accountant is reviewing those books, making these adjustments, and then at that point, well, actually, typically you may want to close as of January 1, because from an accounting system perspective, closing just means blocking any activity from happening before that date. So they may choose to, if they need to make adjustments, open the books and make those changes. but it's a good way to make sure that nobody else in the firm is making changes during that time if you close the books. And then review final reporting. This is for more trends over time and performance. This is from a business management perspective. Your accountant may or may not help with that part of your business, depends on your relationship with them, but being able to see trends, budgets, month over month, year over year to help you make decisions for the following year, that's up to you as a business owner to decide what to do with that information. But pretty much everything can come out of your financial reports at the end of the year. All right, and to wrap up, we're going to get into tips for better accounting in 2021. So we covered all the different tasks that have to happen. And there's a few things to keep in mind in case this year maybe didn't go out as planned. You know, you're behind on some activities, you're overwhelmed with certain things. Well, what could we do differently next year to prevent or to create a better end of year for 2021? And the first thing is to eliminate duplicate data entries. When it comes to your financials especially, you want to enter data, especially financials, numbers, as few times as possible. The more times you enter a particular number, the higher risk of errors. So, and not, of course, there's also time it takes, but I think most people focus on the time of duplicate entry, but don't think about the inaccuracy of it. So it's very important to, from a business management perspective, know where these inefficiencies are because they can cause some serious consequences down the line. So an example of that is if your billing and accounting are recorded in separate tools. You have all the invoice payments, costs, things happening in your billing tool, but your income and your financial reporting is in your accounting tool. The data between the two should match. Do they match if you have that situation? Are you aware if they match? Because after the fact, let's say end of year, you discover all these issues, it will be really, really difficult to go back and find when those issues happen and trying to rectify them appropriately. So you want to make sure to either use a tool that has those functions together, so you're only doing one entry and it impacts multiple areas of your business, or have a really, really solid checks and balances in place, not just end of year, but routinely every single month to make sure that your information is accurate in wherever it may be. This one's a pretty obvious one, but you want to be mindful of IOLTA or trust compliance. Your license literally depends on it. You need to ensure that you are compliant when handling your client funds. And there's a few things to keep in mind as like kind of basic rules to follow. One is just maintain clean and accurate books. And when you're wondering, how do I do that? Here's a few things to keep in mind. You need to have individual client ledgers, individual balances, and running balances to see if an overdraft happened, which hopefully it won't, but it will point that out for you. No commingling. There are some tools like QuickBooks, for example, where you can take money in and out of trust as much as you want and not assign it to anybody. That's a nightmare waiting to happen because you'll end up with this pile of money that you don't know who it's for. So if that process isn't being maintained properly, you're commingling and you'll be confused as to who has what, and that will create a real big, not just bookkeeping problem, but compliance problem for you. Have your regular reporting, and biggest tip is to function as if you'll be audited tomorrow. I think very often people wait until they get that call and then they scramble and they sometimes have a really, really big problem at that time, and it's hard to fix. It's almost sometimes too late at that point. From an accounting perspective, you still need to make sure that your trust accounting is being handled appropriately. Any trust funds are a liability to your firm until they are earned. So they should sit on your balance sheet and rest there until they'll be dispersed to third parties or earned by the firm. And at that point, they'll be recorded as income. And depending on the tool that you use, some of these functionality may be built in. There may be safeguards to ensure this is done appropriately, but they may not be. So just be aware of the tools that you're using and how they can help or hurt your accuracy. Third tip is aim for full cost recovery. So these are the costs that you're paying out of pocket and you need to be reimbursed. My two biggest points about that is it's so preventable. If you are tracking them appropriately, if you're billing them to the matter appropriately, doing your collections, you can get all of those costs reimbursed. But if there's a kind of a flaw in your workflow, if costs are not being accounted for, if they're not being billed, you're not going to be reimbursed. So take a look at what that timeline or workflow is for you right now, and know how they should be accounted for. Other businesses don't have to worry about reporting client costs specifically. They're recorded differently than your firm costs. Work with your accountant to figure out what account should be used on the GL, how they should be recorded, because it does matter the type of work that you do sometimes, what the IRS requirements are. That's purely an IRS item, by the way, to make sure they're recorded correctly on your financial reporting. And our last item is, if wherever possible, use legal specific tools for billing and accounting. I say that because there are some specific needs that all of the things we've talked about today, well, many of them, not all of them, many of them are specific to law firms. So you need to ensure that you either have a really, really solid checks and balances to ensure those things are being done properly, or that you're using a legal specific tool. And here's a list of just very briefly, and there's even more than this, but legal specific needs such as you need matter-centric records, you need specific chart of accounts for your trust funds, your income, for your client costs. You need ways to make sure you don't overdraft and to make sure you don't have funds that are not associated to a matter. You need certain reporting to make sure you pass your audit. And you may even have requirements like fee distribution, which is, you know, my originators get 10% of the money that comes in. That's a very, very complex accounting calculation. Can your current setup handle that? Only you can find out. Work with your team, work with your accountant, find out how you're currently doing these items, and then see if any improvements can be made. And if anyone is interested in learning more about CosmoLex, we are a cloud-based, fully integrated practice management program for law firms, which includes everything you see here, your billing, your accounting, and your day-to-day activities. So if you want to learn more, of course, feel free to visit cosmolex.com.
All right, thank you for answering that, Erica. That's all the time that we're going to have for today. I'd like to thank our sponsor, CosmoLex Legal, and everyone for attending our webinar today as part of the LTRC Industry Insight Series. If anyone is curious about future webinars, please check out the ABA LTRC page or follow our Twitter at LTRC for updates. Erica, thank you one more time for presenting today. We will now conclude the webinar. Bye, everyone.
Thanks, everyone. Have a great day.